and gentlemen, welcome to Woodburn Accountants and Advisors webinar series on market entry into China. You have joined us for day 4 of this webinar series where we will be looking at setting up a business in China. Have you ever conducted a market research study or focus study group on your industry sector in China? Do you know the importance and value that a study can be for your China journey? Are you looking to enter China without setting up a company? Are you familiar with the benefits of a representative office? Are you familiar with how to set up a limited company in China? Woodburn Accountants and Advisors is offering this series of webinars, complimentary and free of charge, on all of these subjects. We will hopefully by the end of this series provide you with information and tools to enrich your China business skills and enhance your market entry efforts into China. Just before we begin the content of today's webinar, I would just like to go through a couple of administration points. If you are in a jurisdiction where information is sensitive, you may be required to utilize a VPN. I know that this is the case in China as well as in the Middle East. So just be aware that a VPN might help you have a more stable line than without. In addition to that, when you joined this webinar, you would be in the audio section of the control panel, you have the option of utilizing your computer audio or a landline. Generally speaking, the landline is a little bit more clear and transparent compared to the computer audio and gives you a little bit more stability in terms of the sound. As is typical with a lot of things that happen online, there might be some connection issues. It usually does take about 30 seconds to 45 seconds to reboot, so don't exit from the webinar. I will be coming back to finish the content. Now, if you decide that you want to switch from your computer audio to your landline, then in the audio section, just click on the telephone and you will get a dial-in number. You can choose the jurisdiction that you're in. You have to put in the access code as well as the audio pin. As is typical with most of our webinars, we do aim to have a 10 to 15 minute Q&A. There is quite a bit of content to go through in this webinar today, so we might not get to a Q&A. However, please don't be shy. Add in your questions, add in your comments, and I'll be happy to answer them at a later date. So let's just quickly test the system. If you would be so kind as to click on the hand button in your control panel, that will allow me to know that the sound is working. For those of you that have done it, thank you very much. You can then click the hand button once again and the hand will disappear from your system. So let's begin today's session. There are definitely some new faces on this webinar. So allow me to just briefly introduce who we are. Woodburn Accountants and Advisors is specialized in inbound investment to China and Hong Kong. What this means is that we establish, manage, and administer companies on behalf of our clients in both of these two jurisdictions. Our services range from anything along a company's China journey, so everything starting with pre-investment advisory, market entry advisory, all the way through to cross-border investment, tax optimization, corporate restructuring, M&A, and the not-so-fun activities that most companies don't like doing, which is the administration services such as the accounting, the tax, the payroll functions. Our clients are all international. They're all focused on inbound investment into Asia, not necessarily just China and Hong Kong. Our clients are doing a variety of activities, whether that will be manufacturing in China, doing it themselves or using third-party providers, manufacturing within Asia, exporting from China, exporting to China, providing services in a variety of industries and sectors within the territory, so everyone is doing a little bit something different. Everyone is also in a different industry and sector. I always provide a little bit of a disclaimer. The presentation that I'm offering today is a general view on the options that you have and the checklist points you need to think about when setting up your business in China. Now, I have never had one incorporation that has gone exactly the same as another company. That's just sort of how China works. As a consequence, if you do have any case-specific questions or comments, don't hesitate to reach out to me directly. To put a name to the voice, my name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I have been in the corporate services industry since 2003 when I first moved out to Shanghai. And I have been only dealing with the Chinese market as well as the Hong Kong market in terms of corporate services. So that's now almost 15, 16 years of doing just this. All of my clients have been in different industries and sectors, and I think what has been a joy over the course of the 15, 16 years is the fact that many of my clients have been extremely successful in the market and have expanded within the territory as well as within the region. So let's start off with today's presentation, which is all about setting up a business in China. And for those of you that haven't participated in other webinar sessions this week, let me give you a bit of context. On Monday, we were talking about the importance of doing a market research study, which should be part of your pre-investment advisory area. So that can be market research about your market segmentation, competitor benchmarking, price benchmarking, brand awareness. You can even do a location study. There is a bunch of different market research studies that you should do, and you should continue to do throughout your China journey. Now, I'm not saying that you need to do all of these market research studies from day one. It's a matter of looking at what's important to you at that point in time in your China journey. The following day, we were talking about once you've done your market research studies, or at least your preliminary studies, most of my clients are not yet ready to commit to the Chinese market. Their focus is how can I do trial runs or test runs or do field trials in terms of transactions and potentially hiring people without actually committing to setting up an entity in China. So we went through all the various options that are available to you at that stage of your China journey. And yesterday, we looked at the simplest form of setting up an entity, which is a representative office. Obviously, I highlighted in yesterday's presentation that I'm not a big fan of them, but they still do exist. And for certain industries and sectors, they certainly are advantageous. The purpose of today is to look at setting up a business in China, doing an apples to apples comparison between all the various vehicles that are offered to you within the Chinese market. So let's get cracking on that. This is the agenda for today. I basically copy and pasted one of the slides that I used on Tuesday's webinar, which is what would be your trigger points in terms of moving forward and actually establishing a physical limited liability company, and there are different forms of that, in China. So for those of you that didn't join, let me just highlight a couple of the most important trigger points that my clients have used in order to then move on and set up an entity in China. So the first was looking at the volume of business you've achieved, looking at the value of business you've achieved, whether your customers are starting to get antsy and asking you, when are you going to be able to issue fapiaos, which are the official invoices in your own company name. Many of your customers might be saying, we want somebody to talk to face-to-face on the ground in China. Where's your local representation? Someone who is actually employed by your company? Do you have a team of people? What's happening within your own organization in China? Are you being asked to stock inventory? Now, this is not a huge one for many of my clients, but it can be a trigger point when it's added on to all of the other points, because obviously stock can always be warehoused through 3PLs. It can be housed through your distributors. It doesn't necessarily have to go through your own entity, but it could very well be that that's an advantage for you. Do you need to increase your brand image? Do you need to have closer contact and develop better relationships with your third-party suppliers? Do you need to start marketing locally and have more control over your organization and the development of your organization within China? So these are all kind of trigger points or questions that companies ask themselves or should be asking themselves as to whether it would make sense for you to set up. And, you know, by all means, like I said, etc. There are a bunch of other questions you should be asking yourself as well. Now, for those of you that missed yesterday's presentation, I'm just going to zoom through representative offices because I really did go in quite a bit of detail on that yesterday. What is a representative office? This is probably the first vehicle that most people think about. A rep office in China, it's a non-legal entity. It is completely dependent upon the parent company from both a legal and financial perspective. The purpose of the rep office is to act as a liaison to the parent company, liaising on all types of business activities occurring in the Chinese market. It is therefore very important to define what liaison means. So I went in the dictionary and I took this out. A liaison office should only communicate, cooperate, and facilitate working relationships. In China, a rep office cannot negotiate deals. It cannot provide physical on-the-ground or overseas services. It cannot transact at all, including with samples. So I went through a lot of the history yesterday about rep offices, but you know, this is really important because this is where a lot of companies get into the gray zone of whether their rep office is a legitimate or not. The official business scope that's written on your license would be this one, which is market research, product display, and publicity activities relating to foreign companies, products, or services. Again, you know, I'm zooming through here because I really did go through this in a lot of detail yesterday. There are a lot of limitations with rep offices in the fact that the parent company has to be 2 years old at least, meaning the business license should have been issued more than 2 years prior. You are required to work with a labor dispatch agency to hire local employees, mainland Chinese employees. You're limited to only hiring 4 foreign employees. And as I highlighted yesterday, in any situation, getting a visa for a foreigner is very difficult. And a rep office must have a registered office address. Now, let's move on to probably what everyone is here for, which is all the different types of limited liability companies that exist. Now, I want to be very firm about one thing and emphasize one thing. There's a lot of terminology that is utilized when you do online research and when you talk to people. So you will hear people say the word woofie. You will hear people say the word FICE. You will hear people say Chinese company. You will hear people say joint venture, equity joint venture, cooperative joint venture, partnerships, etc., etc., etc. Now, here's the big reveal. When you go into China, and if you're not setting up a representative office, you are setting up a limited liability company, an LLC. You are limited up to your registered capital amount. And I'll explain the term registered capital later on. But I just want to emphasize, all of these terms that I'm going to use now in terms of WOFI and FICE relate to the business scope. It does not relate to the form of the entity. Okay? You are setting up an LLC, a limited liability company. And this is where so much confusion comes on, because I will get emails from potential clients who say, I want to set up a WOFI. I'm like, oh, okay. Do you know you're first setting up a limited liability company? No, I'm setting up a WOFI. And I'm sort of like, no, you're setting up an LLC. What activity, you know, then I'm more focused on what activities do you want to do. So be very wary of the terminology that you're researching online. You are setting up an LLC, okay? So in terms of the terminology, what does WOFI mean? So WOFI traditionally means that you are a wholly foreign-owned enterprise, meaning you are a limited liability company that is 100% owned by a foreign individual or a foreign company, meaning a company that is not in China yet. It is overseas. okay? The most important aspect about a WOFE today, 2019, is the fact, and this is how I define it, these would be service-oriented companies, meaning that the business scope and the activities that you designate within your business scope would be service-oriented, whether that's a management consulting firm, a recruitment firm, a restaurant, etc. These are all service-oriented companies. They cannot trade, they cannot manufacture, they do not have import and export rights within or trading rights within their business scope. And by trade, I mean product, trading product, okay? The next terminology is a FICE, Foreign Invested Commercial Enterprise. Now it's going to get more complicated. Foreign Invested Commercial Enterprise is a limited liability company that is also a WOFE because it is 100% wholly foreign owned, meaning it is owned by a foreign individual or a foreign company that is not yet in China. The difference, however, here is that you can trade. So all companies that are manufacturing or that are in any form of trade, wholesale, retail, e-commerce, would be a FICE, but you are still a limited liability company. Okay, I just want to emphasize that. And you have import-export rights. Now, there are other companies that exist, like you will have purchasing centers, you will have R&D centers, you will have regional headquarters, investment companies. All of this also falls under a FICE or a WOFE, meaning that it's a limited liability company, 100% foreign owned by a foreign individual or an overseas entity. It all just comes down to your business scope. The next form of entity is a domestically owned enterprise, which for me is a Chinese company, meaning it's 100% Chinese owned. The individual or the company that is owning that Chinese company is Chinese, mainland Chinese, okay? It includes all types of businesses because for that category, it's more liberal. It's a different application procedure compared to foreign invested enterprises. It's a shorter registration period. And the last point that I want to highlight here is very important. Because of all the first 4 points, a lot of foreign invested enterprises that are in such a rush to get into the market, they do this. They find someone who sets up a company and they use this company as a vehicle to start up their business. There is tremendous risk involved around this. And because this presentation is so long, I can't even name all the different case studies I've seen. But just very simply, imagine you found a guy, he's going to register a company for you. You're giving him the money to start up this business, but you have no control over your over the licenses or over the bank account. Okay, you're not named anywhere. You're just giving him money to start up the business. All right. There's no tracking of whether this individual will give you bank statements. There's no tracking of whether this individual will give you the licenses. You can sign whatever agreement you want to sign. The issue is you have no ownership. Okay. There is obvious risk involved in starting a business like this in China. And you just have to be very wary of choosing this route. The other avenues are joint ventures. So within the whole joint venture scope, you have, and for me, a joint venture in China, by definition, is that you have a foreign entity or individual and you have a Chinese entity or individual that collaborate together to formulate a new entity that is established in mainland China. Why would you go this route of joint ventures nowadays, since most of the market is quite liberal and open, is the fact that you might be in an industry or sector that is still restricted or prohibited, or you might be looking for or working with a local partner that has a well-established distribution channel, government relationships, significant knowledge of the market, etc. Or, as many companies are doing nowadays, you're looking for investors that will contribute capital into that entity. Now, there are now many foreign investors or foreign companies or foreign individuals that are looking for Chinese investors. And for many of these Chinese investors, it's easier for them to immediately invest directly into a Chinese company, making that entity then a joint venture. Now, every joint venture has its pros and cons. I always relate it to a marriage. Many of these joint ventures obviously end up in divorce. You know, you have a 50-50 chance of succeeding. So obviously, precautions need to be implemented. Exit strategies have to be carefully planned. And in this situation, you really should consult with a lawyer that is based in China that can guide you with the whole negotiation behind your joint venture contract to make sure that everything is as bulletproof as is possible. Now, this form of vehicle is a foreign invested partnership. You don't see it that often because it is primarily used for law firms and accounting firms or companies that have partnership type of relationships. So the majority are really law firms and accounting firms. They are slightly more flexible than joint venture structures. I don't want to go into too much detail in reference to these because the majority of companies are not looking for this type of vehicle. Now, I've now given you an overview of all the vehicles applicable and the types of entities that can be set up. The next thing you need to think about is what is the right vehicle for you. So I've listed here 10 points, kind of your checklist to understand exactly what vehicle will fit your needs when going to the market. So, you know, like I said, you've got your trigger points, which are forcing you now to review the fact that you want to go into the market and you want to have a structure in the market. Now you got to look at this checklist of 10 points to understand which vehicle will fit you the best. All right. So let's get started on those 10 points. So the first 3 are really kind of obscure, but are so vital. The first is liability. So not only are you going into the market with the idea that you've got a business plan and you have to develop a budget, but you have to understand how much risk do you want to take in going into the market. So if you choose the route of a representative office versus a limited liability company, WFOE, FICE, joint venture, etc., you've got to understand the liability aspect. How much liability do you want to take on? A rep office has the least amount of liability. The highest amount of liability would be a joint venture structure. Okay? You've got to look at flexibility. So in that regard, you've got to make in your business plan a short-term strategy and a long-term strategy. And the whole idea is that this short-term strategy develops into the long-term strategy, which means you need a vehicle that is flexible enough for you to manage that journey from the short term to the long term. Okay? As I highlighted in yesterday's presentation, the biggest downside is that you cannot just go from a rep office to an LLC. You can't just switch or convert. You actually have to literally liquidate the rep office and set up a brand new LLC, which is probably one area that halts a lot of companies on their China journey for a period of 3 to 6 months to do that so-called conversion. So look at a vehicle that is flexible enough for you. Last but not least, look at a vehicle that is marketable for you, okay? If your customers are like, why do you have a rep office? Why don't you have an LLC? You know, it can affect your image. It can affect your brand image. It can affect your marketability to win bids. So understand in terms of your operation and your relationship with suppliers and customers and any other third party, what is the marketability effect by having a rep office or by having any form of LLC? Just to give you another comparison, you might have customers say, oh, you're a joint venture. Well, who's the Chinese party? And they might do a due diligence on that Chinese party to make sure that your company is legitimate. So beware of that marketability component. Now, one point is the business scope. And as I said, you're going to set up a representative office, which has a fixed business scope. I put that in the presentation. You'll get a copy of that once this event is over. With an LLC, you are also given predetermined formats for a business scope, depending on what you want to do. So I'm going to give you a task. This is an exercise for you to do, and it should be part of your business scope. Business plan. Write down all the activities you want to do within this vehicle. Every single activity. So that could be, I want to import screws, bolts, nuts, steel parts. Be as thorough as possible. And if you want to be even more thorough, include the HS codes of the items you want to import. Okay? The next item will be, I want to assemble, do a simple assembly of these parts to formulate a product called XYZ, and this is the HS code of that product. I want to provide after-sales service. The after-sales service will include technical consultation, assembly, repair, etc., etc. You need to be as detailed as possible. Now, you might say to me, well, I have an idea of what I want to do in the short term. I don't know what I'm going to do in the long term. I can't even think that far ahead. I don't know what's going to happen in 10 years. Just be as thorough as possible. Imagine what you want to do today. Try to imagine how your business might develop and be in 5 years and include that in the business scope. I say this because the business scope and the activities you include in there will actually determine whether you are in a prohibited or restricted industry and therefore need a partner, whether you need just a partner that has the networks and the abilities to do all of these things. It will dictate whether you are a consulting company, a trading company, a manufacturing company. It will dictate so many things, okay? So the business scope is the key aspect, truly is the key aspect to understand what vehicle you will need to go into the Chinese market, all right? And this is the task I want everyone to try and do. Sit down, make your bullet point list of what do you want to do. Now, here's a very key tip, which a lot of people aren't aware about. You have access to the online platform from the Administration of Industry and Commerce. So if you wanted, or you asked your consultant or lawyer, you could very well ask them to go on this platform and research the business scopes of your competitors to understand what are their business scopes. Make your benchmarking, and that's part of the research studies, make your benchmarking part of that activity of looking at what the business scopes are of your competitors so that you have an easier time formulating your own business scope, okay? I think that's a really critical exercise to do. The next point is looking at your registered office address. Now, every single company, regardless of vehicle, type of vehicle, is required to have a registered office address. Virtual office concepts are, by law, illegal. Do they exist? Yes, but by law, they are illegal. If you want to be safe, you want to make sure that you have a room with 4 walls. Only one company can be registered in one office with 4 walls, okay? So it's certainly not like Hong Kong where, you know, as part of our services, all of our clients are registered at our office address. In Hong Kong, that's legal, that's permitted, okay? In China, it is absolutely prohibited. Does it happen? Yes, but it's black market business. You've got to be wary of that, okay? So note that every single company needs a registered office address. There are all types of different offices. You know, you've got residential, Corporate companies cannot be registered in residential spaces. However, you have commercial properties, retail properties, warehousing facilities, you have trade zones, you have a bunch of different options that are available to you, which is sometimes very important to then do a location study to really know and understand what's the right city, district, and office type that you would need for your business. The other thing that you would need, whether you're a rep office or a LLC, is a Chinese company name. Now, I'm going to use the perfect example of Woodburn. I don't market my Chinese name because I'm trying to attract foreign investors. So I only market as Woodburn Accountants and Advisors. Do I have a Chinese name? Of course I do. I was required to set up my company with a Chinese name. The only place people will ever see my Chinese name will be on a fapiao, on the official invoice that I issue to my clients for the service that I am providing to them. But you do need a Chinese name. It has to be at least 2 to 4 characters long. In your company name, you also need to state the type of company you are, which is why the business scope exercise is so critical, because that leads you to understand what type of vehicle you need. So the type of company has to go in. Woodburn, for example, is a management consulting firm. You need then to add the name of the city of where you're establishing. We're based in Shanghai, and then company limited comes at the end. And the same is applicable for representative offices as well. The next component is looking at your budget. So you need to be able to develop a budget to understand how much working capital you need to survive in the Chinese market, to maintain cash flow, to maintain a proper balance. This exercise of creating your budget and understanding how much working capital you will need will lead you to then provide the figure for your registered capital. The registered capital is the actual amount of capital that will be remitted from the shareholder to the Chinese entity. It can only be paid back through dividends, and it is money that is actually going to be used to start up the business. You then have the total investment. So the total investment is the total amount of capital that will be needed in the term of validity of your company to be able to grow and expand. There are ratios involved between the registered capital and the total investment. And by all means, if this sounds now very complicated, please do reach out to me and I can explain it to you with actual figures and numbers. The idea here is that you should be calculating enough capital, registered capital, to make sure that your company runs with a positive cash flow status, okay? And you need to take a lot of things into consideration. When are you going to start receiving revenue? Payment terms are vital in terms of negotiations. Will you get paid in time in order to be able to sustain a positive cash flow with the remaining registered capital that's left? I have seen too many companies run out of registered capital, not be able to pay salaries, not be able to pay rent months at a time. Because the minute you want to start increasing registered capital, it takes at least, from a bureaucratic perspective, 8 weeks minimum to then get the money into the account. So you're looking at a 2-month time frame. So it's very important to make sure that from a financial perspective, you have financial control over your organization from day one. Someone is supervising the bank balances. Someone is making sure there's enough registered capital left over that remittances can be made. You've got to make sure that you are very well established in this area. The next point on your checklist is the corporate structure. Now, an LLC's corporate structure is much more complicated than a representative office. A representative office, you only have to appoint a chief representative. That is it. The person doesn't have to reside in China, but the person is the legal face to the rep office. With an LLC, you're going to have a shareholder, which will either be an entity or an individual. There are many companies, there are many shareholding companies that have a number of board of directors. So as a result, we try to recommend clients to choose one authorized signer on behalf of the shareholder. You will then in China have either a board of directors, which is a minimum of 3 people, or an executive director. You have to appoint a legal representative, can also be the same person as the chairman of the board or the exec. You have to appoint a GM. And then finally, you have to appoint a supervisor. The role of the supervisor is to make sure that the Chinese company is in absolute compliance, right? From a financial perspective, from a legal perspective, from all different types, from an HR perspective, from all different aspects. And the supervisor reports directly to the shareholder, basically meaning that the supervisor cannot then be anybody on the board, can't be the executive director, can't be the legal rep, cannot be the general manager, because the supervisor is ultimately supervising those people who are dealing in the strategy development and execution of the plans related to the Chinese company. So again, these roles are important. They have to be appointed. Please choose the people wisely. Make sure the people that you choose have something to do with the China business. If you are struggling to find enough people for all of these roles, consult with someone. Just for your info, you will need a minimum of 2 people because the executive director, legal rep, GM can be the same person, and then you will need an additional person for the supervisor. So in all of this, you need at least 2 people, okay? But talk to someone about what those roles mean. What's the liability of each of those roles? What does the person take on individually in terms of liability? Are there any criminal issues they have to be worried about, etc.? The next aspect the next 2 aspects you should think about is in relation to human resources and obviously the ongoing operational costs. So with any vehicle that you choose, the idea will obviously be that you hire people. So with a representative office, we've already highlighted the limitations. You have to go through a labor dispatch agency to hire mainland Chinese staff. You can only hire 4 foreigners. With an LLC, you have greater flexibility. You can hire anyone directly. You don't have to go through a labor dispatch agency. However, you may want to just work with a payroll agent to handle all the payroll functions. But you can do all of the employment relationships direct, which means you have your own employment contracts, you've got your own terms and conditions within it, you've got your own employee handbook, which are basically the rules and guidelines associated with the company, etc. So be aware of the human resources component. With any vehicle that you decide upon, sending an expatriate or sending a foreigner or hiring a foreigner locally, the visa aspect will be crucial. Nobody should be able to guarantee you whether a visa will be approved unless it's the approval authority. This is probably one area right now where I see the biggest difficulties occurring. I have had friends who've lived in China for over 25 years who have not had their visas approved, and they even own their own company. So it is definitely something that's difficult. The next component is the ongoing operational costs. So here it's very straightforward. With a representative office, even though it is a pure and utter cost center, you still need to produce financial management reports. You still need to do tax declarations. You still need to pay tax. With a LLC, any form of LLC, you also need to produce financial management reports. You also need to do tax declarations. The tax declarations are more extensive because an LLC, regardless of the form, will be transacting, whether it is in services, trade, or in production. So obviously the accounts are more complex. An audit has to be done and completed in both forms of vehicles, rep office and LLC. So audits must occur as well. What's very important, and I highlighted this again in yesterday's presentation, is that with representative offices, a tax optimization calculation should be made to make sure that you are optimizing your tax liability versus being an LLC and potentially having better tax liability figures. So make a tax optimization comparison when you're thinking about going with a rep office. With an LLC, there are also a lot of tax optimization methods that should be created in any vehicle. And these should be thought of prior to investing in the Chinese market. They should be part of your pre-investment strategy as well. Now let's look at the physical registration of the company. So once the structural plan is outlined, the vehicle has been chosen, it is time to register the company. And I would probably say times have certainly changed since 2003. In some of the tier 1 cities and some of the bigger tier 2 cities, applications can be initially done online. However, in all cases, it is still very old-fashioned, where documentation, and I'm talking about a stack of A4 paper that has been signed, needs to be submitted to the government. For any foreign invested enterprise, I do recommend that documentation is bilingual in English and Chinese. And probably one point that everyone laughs at, it's written here, black ink pen. You're probably wondering, what on earth does this mean? It means that you cannot sign any application document with any other pen than a black ink pen. It will be refused by the Chinese government. Black ink pen means a fountain pen or not anything that's not a ballpoint pen, basically, that doesn't cause a mark in the paper. It is a sign of respect. It is a sign to show you how conservative the government is in that regard. The approval processes are different depending on the type of vehicle that has to be chosen. I've given here kind of the simplest. The first step is name approval. Now, a lot of people ask me, well, what's the timeline of setting up a company? It's so difficult to provide this because I remember in 2003, when we set up our initial company, I actually had to go to a feng shui master to come up with Chinese names because every other name that my team was coming up with was being rejected. In the end, the feng shui master came up with over 100 names, and finally one of them got accepted. Now, the issue is, for us, we don't really care about the Chinese name because that's not the name we're marketing with. We're marketing ourselves with Woodburn. But if the Chinese name is important to you, this step alone has taken some companies that I've worked with up to 8 weeks to achieve, just because names have been consistently rejected. Why are they being rejected? Because you cannot have a Chinese name that is similar sounding. Obviously, it cannot be identical, but it cannot also be similar sounding to any other company name, which makes it an extremely hard process. So be wary of the name approval stage. Again, nobody can guarantee you that a name will be approved. In addition to that, if you've registered a trademark, don't expect that your trademark name can become the name of your company. It might already be taken. It might not have been taken in the trademark, but it might have been taken in the Chinese company name bureau. So be aware of that. When you do your name approval, just also note, because probably it sounded like this is a whole China thing. It's not. I mean, there are billions of companies in China. It's not that there's a unique name for these billion companies. It is city specific. So for example, in Shanghai, there are a lot of companies registered in Shanghai, and as a consequence, the name approval does take longer than in smaller cities where there aren't that many compared to Shanghai companies registered. If you are in manufacturing, you will need to get your environmental license application approved. The next step will be doing an online registration. As I mentioned, in the tier 1 and several of the top tier 2 cities, online registrations can occur. The next step thereafter is the AIC approval, the issuance of the business license, and the issuance of the business license now, it has a TIN number, which is a number that is utilized at, I believe now, 7 government bureaus, which means you don't have to do further applications with those individual bureaus. Your business license will already be automatically issued and registered with all those various bureaus. Then you do the filing and carving of the chops and seals. You then do your application with your district tax bureau. So if you are registering in Shanghai and your registered office address is in Jing'an district, you are registering with the Jing'an tax bureau. Then comes the opening of the bank accounts. And again here, I have had mixed successes with the bank account openings. Now again, nobody, no lawyer, no consultant can guarantee you how long it's going to take to open a bank account. Why? Because all banks now have to do a thorough KYC process. KYC stands for Know Your Client. They need to know the background of the shareholder. They have to go through an intensive due diligence on you. So if you want to open up a bank account in China, think about working with the bank that you're utilizing in your home jurisdiction. If they don't have an office, ask if they have a partnership. Maintain that relationship in that way so that you can try and minimize the amount of time spent on the KYC process. Banks are unique in China, so you can work with a foreign bank, you can work with a local bank. This is completely up to you. But don't rely on your lawyer or your consultant or your corporate service provider to tell you which bank. You need to choose the bank you want to work with. It's as simple as that. So go visit a couple. Go visit the branch offices. Meet with the relationship managers. Do you like them? Because if you switch lawyers, if you switch corporate service providers, you're still stuck with your bank. And you need to maintain those relationships. So definitely choose the banks you want to work with. And then the step thereafter is the customs registration, which is associated if you're trading in goods. So that could be for a trading company or a manufacturing company. So these are the steps, generally speaking. Now, in terms of time frame, for a consulting and trading company, it usually takes, without the bank account opening, it usually takes a good 3 to 4 months to establish the company. So doing all of those steps besides the bank account opening. With the bank account opening, I have had successes where it has taken less than 4 weeks. And I've had failures where it has taken over 8 weeks. So this is where you need to do your own due diligence with meeting the bank branches and understanding that, because you can't start your business operationally until you've got your bank accounts open. You can't transfer the registered capital until you got your bank accounts open. So really nowadays, my sentiment is do your research on the bank accounts. In terms of documentation, this is pretty much a concise list of the documents that need to be submitted to the Chinese authorities to do the application. One of the key documents, is number 3, which is the double notarized shareholder documents. What does this mean? It means you need to take your business license or company certificate of incorporation or other forms of documents. So in every jurisdiction, it's different. You will need to get those documents notarized by a local notary. And then the notarized documents need to be then further notarized by the Chinese consulate and embassy. Now, time scale just for that in some jurisdictions can take up to 4 weeks. I've just done 2 cases in the UK where it has taken 15 working days, so 3 weeks. So be aware of that. Talk to your lawyer or your corporate service provider about what documents need to be notarized, and you can definitely start that process during the name approval stage. so that you're not wasting any time. Be aware that banks and potentially the MOFCOM and AIC will ask for the ownership structure of the shareholder, i.e. all the way up to who the beneficial owners are. It's part of the KYC process of the bank, and it could be something that the local authorities also require. Landlord documents are critical. Basically what this means is that you will sign a lease agreement for your four-walled space, whether that's with a business center, whether it's with a commercial property owner, etc. And then the landlord needs to go to the real estate bureau to get further documentation approved and to register that you are now located in that office. Okay. Biggest issue I've seen is that previous tenants were never deregistered from the location, which just adds additional time to getting the documents from the landlord. So as you're viewing places, make sure that the landlord can immediately obtain the correct documentation for you in order to be able to speed up the process for the registration. So to end today's presentation, just some tips. Obtain pre-investment advisory services. Do your market research to understand what structure will help you to achieve both your short and long-term objectives and goals in the market. Ultimately, you are looking to reduce your administrative costs by making sure that you have the right vehicle and the right structure from day one. Like I said, the whole process to so-called, and I say this, with apostrophes, convert or switch from a rep office to an LLC can be extensive and expensive. So be aware of that, okay? Any change that you want to make within your structure at some point of your China journey. So let's say today you have an LLC that is doing trade, and you realize in 10 years it would be amazing to be able to actually assemble and manufacture in China. You can most certainly update your business scope. You would just then need to move locations, probably to a factory space, in order to justify that change in your business scope. I'm hoping that a lot of the things that I have said today are actual common sense for you. The media portrays China as something that is very complex and complicated. Yes, applications are not as straightforward as they would be in other jurisdictions. It certainly does take time to incorporate an entity compared to other jurisdictions, but the processes and flows, actually there is common sense behind it. It's just the issue of time, which is critical, obviously, for a lot of companies. And although things have sped up tremendously compared to 2003, obviously, if you're new going to the Chinese market now, the timelines I've provided sound extremely long. You've got to imagine in 2003, just for a simple trading company, it took 1 year to incorporate. 1 year. So when I say now, besides the bank account opening, it takes 3 to 4 months, that has been huge progress that has come over the last 15 years in China. And I'm proud that China has been able to speed up that process. But obviously for new market entrants, when I say 3 to 4 months, it just sounds exorbitant. Now imagine what it felt like when I said it used to take 12 months, right? So there has to be certain perspectives within it. But if you look at all the procedures, I'm hoping that you realize a lot of it is is common sense, actually. Now, there have been no questions that have come in. I must have been that transparent and clear in today's presentation. If you do have any questions or comments, don't hesitate to reach out. I'm just going to move on then with the rest of the presentation. Like I said, please reach out to me if you do have questions or comments. You can reach me at Christina@woodburnglobal.com, info@woodburnglobal.com, or through our homepage. If you've liked what you've heard, subscribe. We send out an e-newsletter on a weekly basis about all of our upcoming webinars, upcoming events, old recordings of webinars and also new publications that have come out. It's free of charge, so just subscribe on our homepage or follow us on the various social media sites. We post these things as well. You can follow me, or you can also follow the company. We have one last webinar in this series. Tomorrow I have a guest speaker, Ms. Ting Zheng, who will be joining us and talking about converting opportunities to sales. So if that would interest you, please sign up for it. You can do so on our website at woodburnglobal.com/events, and you can register for that session there. I hope you've all enjoyed today's webinar session, and I hope to see you again very soon. Thank you, and goodbye.